Okay, so just jumping in to do a little bit of sort of weekend wrap sort of review. Just have a quick look over sort of charts and that's sort of how the week sort of finished up and that with it all. But certainly coming into the end of that, we had some solid breakouts. Really, I mean, a lot of these things were closed like gold, Aussie. I haven't seen DXY, but I'm assuming pretty much, all sort of closing on, well, the highs for the Aussie, high for the gold, and I'm assuming pretty much lows for DXY there as well. Certainly copper had its breakout as well. So I'll just basically just choose through the charts and that sort of see what we can make of it and certainly sort of think that we could see a little bit more in this move as we sort of realize coming into sort of December. So yeah, on the Friday, there's the big sort of driving, I guess the catalyst behind sort of what got that last move really sort of seemed to be the what was it, the ISM manufacturing numbers out of the US. That and also then Powell was obviously talking a little bit there as well. But the thing that sort of has been keeping sort of, well, DXY has been hammered down, but the one thing that it has had going for it, I'd say, is the fact that they have still had fairly good data sort of coming out the last couple of weeks and that, or last month or so. Just while everybody else or all the other major banks seem to be sort of coming up with some pretty weak data, the US had sort of still been surprising to the top side, but certainly with this one, we had I'm just having a quick look now. The manufacturing PMI, which is the main bit of news from the US on the Friday, was at 46.7 previously, tipped to push up a little bit, still under 50, so 47.9, but it didn't fail to move at all. So it came in exactly the same as last month at 46.7, and that just sort of saw the beginning of the sort of sell off a little bit there. But then, really, I think sort of Powell's comments, because he was talking, it was pretty late. It was like 3 a.m. I think so he was still talking again sort of 6 a.m. and this is local time, Melbourne. So they were the ones that really, as you can see, I mean, this is on a 4 hour chart here. So I'll start off with Aussie, but if we have a look here, this was so 2 o'clock here. So this is when the news dropped, and you can see that it was already sort of slightly turning up. Like they tried to sell it down a number of times, but yeah, obviously just unable to go down. Well, you've only got one other direction, and that was really to go up. And we can see a little bit of a divergence here as well, as they were trying to push it down each time. We were still getting these rising lows on the stotch. So coming through here, and these two pretty much, or three or so, even along the lows there. So the first pump here was that data. Then 3 o'clock, as I said, that was power talking. And then it really just sort of ground into the end of the week and just sort of consolidated up towards the highs. You can't really take much from the last couple of hours of the week. I mean, most people have probably already finished up early or sort of moving off, but certainly came through very hard and sort of closed on the high. So interesting sort of one with the Aussie here is because last week, just bear with me one sec, there was a little bit of a wedge that we were trading. Where was it? I think it may have been somewhere around this area. I can't picture where it was exactly, but basically we had a little bit of a wedge forming, and then it had sort of broken to the downside and then shot back up. So redrew the lines, had this sort of support to accommodate for this new sort of line that it was sort of seemed to be respecting. And then we've had the same thing here. So we've got a technical break of this wedge. And then sort of like, obviously this is going to trap a lot of people in. They're going to go, okay, because I mean, people love to sell Aussie. They love to short it, particularly from these levels after it's run up, 300 plus points over the last, month. There's a lot of people that are happy to try and sort of give it a shot and try and sell it from up here. But you know what I mean? They just keep pushing it on and just keep sort of squeezing those shorts. So, I mean, this is a nice sort of way for Aussie to sort of finish up. And as this is, as I said a second ago, you can't really take too much from the last couple of hours of trade for the week. But as a setup here, you'd have these are your resistances here at 66.58, and that's a clear breakout, 14-point close on the 4 hour candle up above that previous resistance. It stopped just shy of that little wick high that we did have sort of put in. But if you sort of go, okay, look, we're obviously not really respecting this line so much anymore now, and you look at this on a sort of fib level basis. So we drag this down here to get this sort of straight move through here. The sell down didn't even, it came to 23, I mean, halfway to the 38, but obviously quite a strong sort of rejection up through this area here. So this to me sort of says that there's still a lot of there's a lot of sort of buying pressure pushing this thing up, because you got to think that sort of like, the last month we've gone up sort of 300 plus points. There's a lot of people that would have been sort of trading, myself included, from these lower levels that were happy to take profit around these well-known sort of resistance zones. But obviously, anything that gets sold off or any profit that's taken here, they're just sort of absorbing it all and just driving it higher. So certainly a very nice close for Aussie coming into the end of the week there. The only sort of downside I would say about this thing is generally that you get these candles which close without a wick at the top. As I said in a couple of these other ones previously, that can be a bit more of a sort of reversal. Even though sort of like if you were trading stocks or shares and it was closing on the highs, that's an absence of sort of sellings, people taking profit obviously, and it's sort of still pushing up. But for FX and that, it tends to be almost a little bit of a sort of opposite effect. So as you can see with these ones here, it's had a top wick here, this came up, closed pretty much right on the highs, and then bang, we had a quick sell down. This long candle pushing up through here, yes, it had a bit of a push up sort of early, but resulting immediate afterwards anyway, was obviously a bit of a sell down. So it's just something to be sort of wary of coming into the new week. And certainly I think you've got to respect the fact that it's broken back up into this upper range. We knew 66 areas, so I'll chuck into this other chart here. But you can see this following the plan here, but we knew that this area here has previously been very strong reversal areas in that. And this is based on the fact that not just, okay, it got a reaction from here, but it really was the base of this push up through here. And this is that's a 3.4% move up there. I mean, you can sort of say maybe up to around this area here is 2.6%. Obviously we came down, but again, back over here, this is a 4.3% move, and then going the other way, there's 3.8. So you can see that the areas, like when it's come into contact with these areas, the reaction's been quite strong and substantial moving the other way. The fact that we're now sort of gone to the top side, and we followed that course that we sort of traded out planned out, it's getting late on a Sunday here, but very much followed the plan that we put out. I think this must have been the Tuesday or the Wednesday, and we said, look, as it breaks through this zone, we're going to shoot up here, we come back, we back test, followed this perfectly, and now we take off. So the breakout and confirmation line is obviously above that previous high, which is this previous wick here, so 66.76. But even if we do get a little bit more of a sort of a ranging through this area, it's still very much skewed to the upside here. Obviously, we had the RSI overbought, still in this overbought area, and this is on the daily. But it looks to me like it could be sort of evening out just for another leg and another push higher. So up above here, 67.24 is the next sort of horizontal level that we'd be looking for. And then realistically that as well, if we jump onto this high, which one actually, go back onto this other Aussie, this is the big one that I feel we're really looking at, which has started back here from, what's this, start of 21, Feb 21. And realistically, it's never managed, like it sort of came up around this area here. You probably see this maybe a bit better on a monthly. And you can see it's sort of cut through these areas. It's tried to get above, but obviously the rejection was quite strong and pushed it down every time. So this is what really, so I want to see Aussie. I mean, we're only, what is it, the third, so one trading day into the month, so you can't really sort of base too much on it right now. But I think this zone up along here, the monthly body fill, previous monthly body fill now, up around sort of 67.20. We've got this sort of monthly weekly falling resistance that we're sort of getting along the top side here. I think these things are going to be a little bit difficult. So again, we could get a push right through to the price target here, close the year off on a very strong risk on sort of attitude. But certainly there's a couple of levels to sort of watch out for. We've got the RSI still sitting right in the flat here, has crossed back over to the positive side. So again, taking out that previous wick. And if we do this early, I think definitely we should see a fairly quick move up to around to this 67.20 mark would be the next sort of short-term target. And then so on and so on up above this area here, we've got the larger measure move price target, 68.42, which will really complete the measured move of that large wedge that we've been trading since 63. So yeah, certainly at the moment I could see a little bit of a pullback. Like I'll be waiting. I closed out a lot of my Aussie positions coming into the end of the week, just to sort of lighten the load a little bit and really sort of book some stuff in. But any sort of dips, I'll definitely be looking to be sort of picking them up and buying on. Okay, flip across to gold. Again, another one came right through. Now, this is a great trade. This was the measure move that we sort of planned out on, must be Thursday, Friday, I can't remember. But somewhere around this is on the 4 hour candle. So, yeah, excuse me, that would have been Friday morning, the early hour here down here, and we were around 2036. And basically sort of pulled out, okay, yeah, if we've got this like flag, it looked like a flag coming down through here. We had one fake out here, as gold does. It never really seems to break out on the first move. And then sort of came back down, and then along with the US data, with J Powell going on about his stuff, that really saw it just hammer to the top side. And you can see that this measured move has just worked perfectly. I mean, this is the thing, and this is what I say with gold as well. It does respect the chart a lot. I mean, sometimes you get these just flamboyant moves of just like stops being hit and really sort of flying down, but 90% of the time, it structurally works very well. If you look at these areas that we've isolated, and these are areas that we've picked out all the way along, the measured move up here and it's sold down. These sort of horizontals, you can see as they broke through, it hit resistance exactly where it should have. Back test on support, exactly where it should have. As it broke those previous highs, bang, moved up, and we've done the same up here. It chopped through this zone just to begin with, but obviously as it sort of came back to the other side, it's very much respecting this zone, as it should, on a technical basis for support. And obviously just fired off into that sort of price target at the end there. So in terms of sort of where to go with gold here, I mean, if you just have a look at the chart, you know, we're pretty much, I mean, this really sort of depends, excuse me, what feed you're on, because I've seen some where, you know, they were sort of calling 2083 or so, somewhere in the 80s for the all-time highs. For this one here, which is the Yuan on the weekly, that's a completion, like a test of all-time high right there. So, excuse me. Uh, there we go, 2075. You know, it took out all these other previous wicks. Look at the size of this candle so far. And this is, as I said, listen, well, this is a week, that was last week, so weekly candle there. You know, this thing is definitely firing up. I mean, if you think about, like, I'm not a big Elliott wave trader, but I know the theory behind it. And obviously we've got one leg here, that's your pullback. Second leg down, third leg to move here. This third leg, if this were to be a 5 wave move, is generally the biggest leg. And if you sort of base that on this first leg being 10% move, like 188 bucks, and then you go, okay, well, where would the, if we had a second leg equal to the first, or sorry, third equal to the first, that pushes us up to 21.22. And as I said, generally the third leg on these things would be the higher one. You'd have your pullback here, and then you'd have your fifth. And, you know, this could definitely be pushing up. We could be looking, you know, definitely over 2200 if that were to be the case. But again, this is all planning ahead and sort of thinking, okay, what could happen, this and that. The more importantly is what's going to happen in the here and now. And I think the fact that we've really got up to this high level, closed on the highs, so I'll glad these out of the way, I think shows that obviously the buying's there. I mean, past 2010, as per the notes and that, we're sort of saying, look, that's the major breakout. And you can see it just hasn't looked back since. It's a 70 buck move in like, you know, 4 or 5 days. So I think gold very much in the same boat as Aussie. Any sort of dips, I'll just be adding to, and then sort of try and pull out some areas where we can go, okay, you know, where might it sort of pull back to? Because don't really want to sort of add a great deal to it, you know, as it's closing on the highs, because I have a feeling we may get a little bit of a pump up. Like this is what I was saying, gold is just going to be on everybody's radars now. All-time highs with it is massive. And the further that we sell down on DXY, US dollar, well, you know, it's just going to fuel it more because the money has to come from somewhere. And sorry, the money has to go somewhere as you sell off that US dollar. And equities have been ripping as well. But gold, is reverting back to its sort of typical sort of inverse relationship with DXY. So if you said, look, maybe this, let's make this a different color. That orange sort of thing here. So you can't really sort of call this so much of a channel. I mean, if you were to sort of do it along this line here, we could say, and this is on a daily chart as well, remember that this could technically be a fairly decent looking channel through this period up to about 2050. And then obviously, given the data and the news, Jay Powell talking towards the end of the week, people just getting really excited with gold, that could have seen a bit of an overshoot. And this is what makes me sort of a little bit cautious to be buying too early on this gold move, because generally, look, the market's going to be looking for the pain trade. Where can they sort of inflect most of the damage? And I would say in the short term, the here and now would be people talking about it, people that don't trade it normally, people who haven't been following it, people see that it's at an all-time high. And look, you know what? It's at an all-time high. You got to respect that. And in 3 months, it'll probably most likely, 90% chance, it'll be even higher. So they'll be fine. But a lot of people don't trade those kind of time frames, and particularly if you're not sort of used to trading these kind of assets, they're going to buy it, be like, wow, gold's at the all-time high. They'll buy it. Well, it may go up a couple of bucks early, and then I expect it to get absolutely crushed. So crushed is probably a bit of a dramatic word with it all, but I expect it to pull back because all these people will be buying it because they've heard about it or they've seen it on the news or whatever. They'll drive it back down here. They'll all get stopped out. All the people that are actually sort of trading it will be then sort of ready to pick up their stopped off positions, and then they'll just continue and rip it up. So again, I think I'd expect probably a little bit of a push up early in gold early week. And then I'd be looking for after that first push up, make a high, draw it out, mark it out, look for the pullbacks, and then sort of be buying the pullbacks coming through there. But this line over here, this seems to be a bit fairly decent sort of rising support. The bottom side of this channel, which hasn't sort of seen a touch up for a while. So I think sort of like, if I can get it back around sort of 2050, I mean, obviously even lower, but if possible, like 2036. But I don't really see it sort of coming back over here. I'm expecting more of a sort of, as I said, early push up. Then I'd imagine to come back, maybe like a little bit of a. You can't make these they're too small, but this kind of action, and then this is where we'll sort of get back and actually make the move towards 2100. I think a little bit of a sort of a consolidation, a attempt or two to go higher early. Then stops underneath that, textbook stops underneath that, they'll get hit, taken out, buy it around the sort of 2050, and then should be able to sort of push up to the next one. Now, I think 2100 seems like a fairly decent level. I think you just got to pretty much respect the fact that it's hit all-time highs, it's going higher, further the US dollar sells off, it's going to fuel it more. So, it's really just who can make the assumption of how high they want to particularly take it in this move. We're moving into no man's land. I mean, it's all-time highs. So I think there's certainly some more upside with gold, but I think I'll sort of be a little bit cautious on the early open for the week because I think there's possibly a couple of little short-term swing moves to the downside before we sort of see substantial new all-time highs. Cool. All right. So flip across to DXY. DXY was coming back pretty strong prior to that news. Like it was really sort of hammering along here, but of course, Powell kind of shut that down. So as we sort of move through here, it's starting to sort of like lose a little bit of this downward sort of strength. We did have 2 bullish days here before it went lower, 2 bullish days here before it went lower. We've had 2 bullish days and it's trying to come back down here. I think we could probably still see some downside before we see a bit more of a rally effort off DXY here. Of course, so we did see it sort of come right off the 61%, and this is why the second price target was the place, and it pretty much came to this to a cent of where that price target was. But I could see this potentially trying to sort of consolidate this area a little bit more. We do have a couple of horizontal supports down below this. We got the back test of the top side of this previous channel. So there's a couple of reasons from a technical sort of standpoint to be buying US dollar around here. But, you can't sort of just say, okay, look, because a technical thing, it looks like it will. but we did see this little push up here. Didn't quite get up to this falling resistance of the channel resistance basically, as it has been here. But this is pretty much what we said. We'll see an up and then a push back down. So I think we still have downside on US dollar. Ultimately, I think there's going to be a lot of a move lower, but in the more medium term, I'd expect probably a push back down to this 102.60 area to sort of really test to see if we are done with this. And at very best for bull case sort of dollar scenario, like dollar bull scenario, you get a consolidation through this area here. I don't think this is going to be a V-shaped recovery or anything. Ultimately, I don't think it's going to be going up, but I'd imagine this to be a bit of an area. Let's mark it out a bit more. Where we could see some sort of consolidation and it try to put in a little bit of a base around this area here. I mean, we're coming into the end of the year, so it's hard to sort of say what they're necessarily going to be doing because obviously, like equity markets have been ripping pretty hard. So, people have sort of come right back and actually made a little bit of money here. So, are they going to sort of book it and sort of take it, take the profit and take a little bit of a holiday before the end of the year? Look, it's a possibility. And if they do that, if we see equity markets sell off a little bit, then there's a good chance that we're going to sort of see a little bit of that money flow into the US dollar. But certainly I wouldn't be sort of thinking, oh, here we are, we've reached the bottom and we're going to move back up. That's what I was saying last week. Like the reason for this to bounce from this level here, to me, because it was so perfectly on the 61, like within 1 cent, to me, only kind of really seems as a technical level, and people sort of closing their shorts, people going, okay, look, I'll give it another shot from here. There was no sort of big bit of news that fundamentally changed the landscape that made you think, okay, wow, this has now come to light. We've got a new outlook. We've got a new take on it. I think that sort of realistically, this was just people taking profit, and then sort of, what I mean, people obviously trying to give it another go. There's a lot of talk of sort of like, where is the pain trade and who's really going to get squeezed out more? Well, maybe there's a lot of people that are sort of, US dollar quite bullish. And despite this pullback, they think it's still going to be going a lot higher. I saw some data the other day, sort of saying that hedge funds were at, I can't remember, it was maybe a year or 2 year highs or so of net long US dollar positions. So do these people know something? I don't know, but there are that with that kind of data though, it means that there are sort of people like hedge funds, people that are doing this not just in their bedrooms, who are willing to give this another shot to drive it higher. So, is this going to keep it buoyant? I'm not 100% sure, but certainly I think there's some arguments for sort of people thinking, oh, hey, US dollar could have another pullback, another run off this sort of low here. So, they're the people that are buying. You got people closing short positions. But yeah, I don't think we're going to see a major sort of break reversal here. I think at best for them would be as consolidation here. If we break through what is this 61% zone, then I think we're looking at, we've got a couple of sort of horizontals here, but realistically, 101's the next main target coming down here, which is the top of this sort of support area where we've seen it being previously respected. And also we've seen it, that's the next fib line basically. So you got a couple of reasons. If it were to break this 61, to sort of be targeting sort of really 101, 101.20, that kind of area in change. So mark this. Yeah. All right, so just moving on, but as I say, yeah, look, in the short term, I could see probably a little bit more downside with US dollar. This will come in line with gold having another push. Because if gold does have another sort of run in it in this one move, which of course I think it does, I think it'll have a bit of a pullback first. I think that'll sort of coincide with US dollar selling down a little bit further as well. Flip across to copper, and copper took out our price target. Let's just clip straight into it within, again, a couple of cents. So this is where we marked it out. I mean, you could say, look, this is the big zone here. This is the grey one. We'll actually hit the grey zone as well. So, in change, a couple of cents one way or another. This is price target. It's hit it and it's rejected. So the break on this was beautiful, actually. And this is, again, if you go back and watch the other videos, because it's good to sort of see how, we spoke about the price action and how I sort of looked at the charts and how what indicators and what confirmations were there that showed us that this is actually moving forward. And, all the way through this area here, we said, look, it's respected the this top area here to be a resistance, supports, bang, bang, falling resistance, came through, broke through. We knew it wasn't just going to go straight away, and it didn't. It danced around, but it was respecting this previous sort of short-term sort of falling resistance as a new support, and it's just used this as a launch pad. It's come up, it's broken the highs, it's back tested, and then obviously once it breaks that sort of breakout candle high, it just has taken off. And so that's sort of really come out quite strong into the end. So, coming up into these heavier sort of resistance zones here, again, resistance zones aren't necessarily the be-all, end-all stop of it all, but there's a good chance that you're going to see people sort of cool off a little bit with these positions. This could sort of come in line a little bit with US dollar having a little bit of a push. But again, you got to respect the fact of where it is. And ever since we broke this sort of, daily, monthly, weekly falling resistance with the back test and the break, it just hasn't looked back. And so, yeah, it's obviously looking very sort of quite strong at the moment. So I think that we probably have a little bit of sort of consolidation around this zone here now. I think sort of certainly the fact that it's come through here means that this will be quite a strong support for it. So, I'm looking between sort of, what's this, 385 and change and, 395. I reckon this is probably going to see a little bit of back and forth. Looking at all these charts, it's hard to sort of say, okay, I mean, it's easy to sort of call it as these moves are breaking out, but when they're sort of well into it, and, this move here from the lows is from October, mid-October, so we're coming up sort of, 2 weeks shy of 2 months. It's been quite a solid move. And, is it just going to sort of consolidate into the end of the year? This goes along with what I was saying about DXY. There's a good chance that DXY just sort of peters out and doesn't sort of, we've seen all the breaks of the major breaks, and maybe recoveries just get stifled. There's a good chance that we could be seeing the same with copper here. I do think copper's got more upside to come, but I wouldn't be surprised if, like similar with DXY, we see a little bit of this sort of action happening through here. This isn't like an exact sort of highs and lows, but just to emphasize the point that this could be a little bit of a sort of consolidation zone through this area here. So, I mean, as I say, Aussie's coming into some pretty heavy resistance. Gold's at all-time highs, so, there's a good chance that it sort of, it'll pop off and run for a little bit, but there's going to be a lot of people trying to book profits in that, particularly coming into the end of the year. You've got copper coming here very strong. Look at this on a weekly. This is a perfect trade, and this is what we're saying. Once it broke that previous sort of wick high of this last week's candle, it's just taken right off and going up into the top area here. So, I mean, this shows perfectly. We know that the sellers have been here before. You can see it on the chart time and time and time again. This is why we put the price target here, and bang, they've come up into it here. So I wouldn't be surprised if we do get a little bit of sort of consolidation, but likewise, if we do decide to just power through and head to filling this wick up the top up here, I wouldn't be overly surprised as well. I mean, this is moving quite strongly. This would be in its third leg here, so this is the 1, 2, and this would be the third here, which again could lead to a little bit of a pullback for a consolidation before breaking to go for a fifth leg to move it a bit higher into the end of the year. RSI is moving quite healthily, like it's not really up, it's not up into the overbought area, still quite wide, it's not about to tip, but as I said, I think we could see a little bit of sort of back and forth, particularly earlier in the week. So we'll just have to sort of keep an eye on that as well. And finally, we'll finish off with China, still somewhat holding its support area, but again, closing right on the lows. And, you can see here that it tried to sort of get up. It's tried to get up. This is the big area for it to get above. This sort of 717, 716. Till it can get above this substantially and close above it, it's just really just a slow car crash death to the downside here. And, you know, we're starting to get a little bit more of some lines here that we could be drawing. I mean, there's a little bit of a channel sort of coming down here. So I'll just move this for its wick down here. So yeah, we're right on the weekly support zones here. Again, if we see a break of this area down here, you know, we're going to see the corresponding things. We're going to see Aussie pop a little bit more, copper probably pop, US dollar sell down. Yeah, all these sort of things happening sort of in conjunction, sort of with each other. But I still think that given particularly this is on a 4 hour, that RSI really sort of coming down with such a bearish candle and also room to move with this RSI. If we break and hit this alert going off, this is the weekly supports alert. As you can see, it came down within a couple of cents of tipping it. If we can see this sort of alert go off, I think this is going to be a good catalyst. And we could actually sort of see if this were to be a little bit of a channel sort of coming down here, we could just see a capitulation and just see a quick move to the downside here. Around that 705, I think, is probably realistically the next sort of price target for China in the short term. But as I said, we'll just have to sort of see how the week sort of kicks off. It doesn't really seem to be a great deal of news over the weekend to sort of be driving markets or firing anything up. The Middle East situation still sort of ticking along in the background, but I think largely markets have really just sort of moved away from that more recently, and they don't seem to be sort of worrying about it too much. One of the big ones I think we do have actually, if we just have a quick look here, is so we got the interest rates, of course, for Aussie. Tuesday, 2:30 local time. Largely tipped just to hold rates. So I guess around that would be sort of how the wording comes, because you know everybody's sort of saying, oh, you know, well, that not everybody, the RBA themselves are saying, look, they're data dependent. Let's just flip back onto the Aussie while we're talking about this, but they said they're data dependent with sort of how they're going to move forward. And obviously CPI came down massively the other day. Initial knock off the bat though, Aussie didn't even care. Like it sold down a little bit afterwards, but it just hammered through. So I can't remember, where was it? Around midweek here or something. And it really just sort of took off and obviously sort of sold down a little bit afterwards. But yeah, obviously you can see how it sort of fired back into it come the end of the week there. So I think sort of like, you know, there is a high chance that they do pause this week, but the wording around it, I think, will be the big driver. So if they sort of, even if they pause and then they say that, okay, you know what, we're still just, you know, going to see how things play out and have a bit more of a hawkish tone, I think we could still see some upside on Aussie. However, sort of, you know, never really to say, but a couple of the last sort of data releases or CPIs for Aussie have really sort of blown out what your sort of textbook view would be. So it could go either way with it all. We're just at the mercy of what's going to be happening with the US. In terms of US though, there doesn't really seem to be a great deal sort of going on. You got ISM services on Wednesday with jolts. And then we've got don't have much going on. We've got that, but then we've got ADP Thursday and then NFP on the Friday, of course, being the sort of first actual sort of full Friday of the month. I guess not including the very first. But yeah, we'll sort of see how it goes. I think in short term, I think we still have a little bit more upside with gold and Aussie. I think a little bit more downside, but mainly sort of ranging with DXY. But I'd expect a bit of a slow, easy start to the week. And I think any sort of short sort of sell downs, I'm just going to be looking to add to positions for longs for now. All right, that's it from me.